Yo, what's up traders? So in this video I want to show you my signature model that I used to make all entries when taking my trades. So this signature model requires you to have a good understanding of the market structure, and therefore I will start by showcasing something small about the market structure. So if you watched my videos previously, you now understand that the market moves in impulse move. This is the impulse and correction, impulse and correction, impulse and correction. That therefore means that the market will be making higher highs and higher lows anytime is in an uptrend. So these are higher high. This is the first high, of course.
Have you heard all the Forex hype online? Flashy cars, false profits? Here, we are not about the hype. We are about the skill. Our training is real, practical, and beginner-friendly. We will train you how to analyze the market, risk management, and also how to grow your account step by step. You can visit us at Spar Mall, 2nd floor, S47, or give us a call on our number, which is in all our social media platforms, to book your slot and start your journey to financial freedom.
These are low. These are low. And these are high low, right? These are high low. So this is the classical market structure illustration of an uptrend. Now when the market breaks structure on the left, then this is what we call the break of structure, and again break of structure. So during the impulse and corrective moves, that is the impulse and retracements, you want to see the market breaking structure, going up, and at the same time you want to see a series of higher highs and higher lows. Now the vice versa is also correct, in that in a downtrend you want to see the market breaking structure going to the downside, and again that is another break of structure. So the market is making now what we call the lower highs and lower lows, right? So lower high, these are lower high, of course this is the first lower high, this is a lower low, these are first low, but this one is another lower low, and this is another lower low. So in a downtrend the market is making lower lows and lower highs, at the same time breaking structure. Now I want us to focus on what? I want us to focus on when the market is in a downtrend, because for this particular market that I will be showing, I want to illustrate it with a downtrend. So make sure that this thing is sticks in your head before I jump to something else. All right, so now looking at the CAD-JPY, let me delete everything from this chart again. Looking at CAD-JPY, this is the chart that we have. So as you can see, the market from a daily perspective was making a series of high highs and higher lows, but once we got at this point again, you can see the market was kind of slowing down, even from the move that the market made, the final move that the market made here. You can see is like the market is a little bit tired, and you can see unlike the previous breaks of structure on this side, break of structure, that's another break of structure, and again the market still on the daily made another break of structure here. However, this one I want to change it. It's not a normal break of structure, because you can see the market was making the final break of structure here, there was a very sharp return to the downside. So I want us to call this one a liquidity sweep, because that is what happens when the market is making a change in a trend, or rather doing a reversal. So now in this market structure from the daily point of view, we again had this last swing, or this fractal that was broken. This is what we call the change of character. So basically means that the market has changed the trend, and now we are no longer looking for bullish move. We are looking for bearish moves. Now going down to the lower time, to one time frame lower, that is a 4-hour time frame. Now I was looking for the market to what? To at least, I think my mouse is kind of misbehaving. I'm sorry about that. So I was looking for the market to retrace to this to this order block here on the 4-hour time frame. So I was looking at this as a very sweet spot of supply, because we have the order block. At the same time, we have a great imbalance, as shown from, there's a very big imbalance that the market did on this particular zone. The imbalance is what we call basically fair value gap, or what most traders will refer it as an FVG. Now once we had the change of character, now I was looking for sales. Remember, I have already said that once we broke this, I was looking for a retracement back to this, at least the 61.8 or 50, or even to the extreme order block, so that we can get into jump into sales. But this did not happen. The market actually continued with a series of lower highs, more break of structure to the downside. So as you can see, we proceeded with the break of structure here, and we had another break of structure here. So this move is what I was expecting to get back here. So I was not able to jump into any sales setup. Now with break of structure on the 4-hour time frame happening, then it means the market is going lower and lower. And even as we go down, what we can be able to look at is from the daily, we had this support level here. So once the market hit this support level, of course, if you are able to time the entries, these sales will be very ideal for you, would be very good for you. You would have taken advantage of this. But how about for anyone who has not been able to capture these moves? These were two good sweet moves. But now I want to illustrate this particular move with a counter trend trade. So how about somebody who was not able to take advantage of those sales in the direction of the trend? So how can you be able to take advantage of the market? So looking from the higher time frame, we can see this was a daily support, as well as a daily support and 4-hour support zone. So we mark that one. Now once the market arrived here, you can see we were still expecting for the market to pull back. We were still expecting for the market to pull back after doing this break of structure. So we expect a pullback back into an area of supply to continue selling, to continue with the same downtrend direction of the market. So but this also did not it's yet to mature from where the market is right now. So now I want us to look at this last sell candlestick. You can see that the market closed with a wick on the downside, and that was our informer that we can take a counter trend move, just a short one, as the market retraces back to the supply zone. Remember, if you are I am a supply and demand and supply trader. So anytime I am actually looking at I'm looking for supply zones for the market to get back to those supply zones, so that I can be able to short that market. Now, since I missed these two moves, how can I take advantage of the pullback so that I can at least grab some few pips from that market? So now we go to the M15. We go to the M15. Now, the same thing that is happening on the higher time frame is also happening on the lower time frame. So if you can check here, I'll not go far, but we are having also break of structure on the M15. So that's a break of structure. Now, this is not the normal break of another break of structure, yes, but we can call this one a liquidity sweep because it's the last move just before the market does a what? Does a reversal. So once we had this move, now I was quite certain, and you can see the liquidity sweep will always leave a very long wick just to, it's just a quick move done by the smart money, just to liquidate the stop losses that are below here, at the same time activate the sell stops, and then move in the opposite direction. So once we go to the lower time frame, now we will be looking for this kind of setup. So we want to see in the lower time frame, we want to see a change of character, and the change of character is characterized by the break of the last lower high. Then the market will now proceed with this kind of move. So we want to take advantage when this when this change of character is happening at this particular point here. Be keen, guys. So when the change of character is happening at this point here, this is when we are now interested in the market. And once we have this change of character on the lower time frame, that is a confirmation that the market is now ready to pull back or change in the direction. Now, if you can see, look here. So I'll not mark from very far, but you can see this was the market tried to push a little bit lower from this point on, and we were expecting at this point the market broke this structure. It's kind of a double bottom after this liquidity sweep. So if you know how to trade the double bottom, of course you know that once a double bottom is formed, what you'll be looking for thereafter is a neckline. So you want to have your neckline at maybe that level there. So once the neckline is formed, then you are able to make your entry on the break and retest of the neckline. So a normal price action trader will see it as a neckline. I'll also inform you that from the SMC, or what we call ICT, somebody will also see it as what we call the mitigation block. So you want to target 1:2 for these trades, which are counter trends. You don't want to go very far, so you want to have a target of 1:2, and you can see your entry from the neckline, break and retest. This is the retest that happened here. So would be it would be a very nice 1:2 risk reward ratio setup. So this is a signature setup, whether you're trading counter trend or you're trading in the direction of the trend. This is how you can be able to time your when the trend or when the market is turning the other way around. So these, as I have said, these are a double bottom kind of setup, or you can call it a mitigation block from the ICT language. That will be your signature setup, or you can call it a change of character, like it's a trend invalidation concept from the lower time frame. So the trend which was going down, or now the pullback is basically, the pullback is ready to start moving, or the market is ready to start moving upwards after this downtrend that was happening. So we are taking advantage of the pullback. As you can see from the 4-hour time frame, we are still bearish, as you can see from the break of structure going down. But now once we switch to the lower time frame M15, we want to take advantage of this of the pullback, and that is how you can be able to locate when the pullback is right about to happen. So that is how you could have timed it. Now I want to show you another model from the same setup. Now this trade happened overnight. I think it happened around from if you would have set your buy limit around this neckline, then this all move was happening during the night, because once we woke up around let's say you get on your trading desk around 9 or 10, then this trade would have left you. Now Again, myself, I was able to identify this order block on the what, on the M15. So order block on the M15, so it's just a lower time frame demand zone. So, and once the market had broken now very clearly, even out of these last major swing from the M15, you can see the market had already broken out from this major swing. Then the market still did a pullback to this demand zone, little demand zone over here, and that would also be a good entry for you. So this could also be an entry model for you. So you can enter from the 50% of that demand zone. Your stop loss just below this swing would be like 22 pips. Then target of 1:2. As I have said, this is a counter trend move, so you cannot target so high. So as you can see, this is a CAD JPY setup. The trade is still active. As I have already said, this would be your first entry if you had spotted this mitigation block, or you can call it a double bottom earlier on. So this could still be your setup if you are able to spot it earlier on. So that is CAD JPY. Of course, as the market is pulling back, you cannot be able to ride it very far, because at any given time the market might continue with the bearish trend from this order block that we have on this level. So that is why we are taking it as a counter trend, and it's a very short move. Now I want to show you another setup so that you can be able to take advantage, so that you can be able to understand it deeper. Now this is another setup of NZJPY, just a similar setup, and actually for this trade I was able to send it in our VIP community group. So from the daily, almost similar structure. You can see the market is now has done a change of character from this point on, this vigorous sell. So once we have that change of character, now we know obviously we are looking for a bearish market, or rather we are looking for sells. So that is these are break of structure going down. Now going down to the 4-hour time frame, we are able to spot even the structure better and more clear. So as you can see from the 4-hour time frame, that is what we have. So, and then now this market is kind of overstretched, and if you can see from this level, I was looking at this as a support, as a support zone that I was looking for. This market is a little bit overstretched. NZJPY, as you can see from this massive sell-off for 2 consecutive days, I was looking for a retracement from this particular market. So now I know that I'm looking for a retracement. So of course, this daily support would be a very good ideal point for the market to find strength to push a little bit higher before we continue selling. So now once you come to the 4-hour time frame again, you can be able to spot what this is the high of this move, this is the high, this is where the market started, and this is the low. You don't want actually to take this trade to a more than 50% retracement, because at any given time this particular counter trend move might go against you. So you want to be very keen on the retracement. Let's say this level would be an ideal point. You don't want the market to capsa exit this point. So going down to the 15-minute time frame, this would be your view going down to the M15. So I will mark
Have you heard all the Forex hype online? Flashy cars, false profits? Here, we are not about the hype. We are about the skill. Our training is real, practical, and beginner-friendly. We will train you how to analyze the market, risk management, and also how to grow your account step by step. You can visit us at Spar Mall, 2nd floor, S47, or give us a call on our number, which is in all our social media platforms, to book your slot and start your journey to financial freedom.
These are the last break of structure, which is also the liquidity sweep on the M15. So remember, we are looking for, when the market is in a series of making lower highs and lower lows, then we want to see the market break the last lower high. That is when the change of character is confirmed, and once the change of character is confirmed, we wait for a pullback. Then we make our entry and we'll be ready to ride the move up. So your ideal entry would be here after these after the change of character has happened here. This is where you want to put your entry after the change of character. Now we want to see a retracement, of course. After the change of character, we want to see a retracement. Now the retracement, you can always time it with a Fibonacci. You can also use the fair value gaps. So your stop loss, ideal stop loss there. Then you want to target, as I have said, this particular setup, I was looking for a 1:2. So now, looking at this point, this was the last swing on M15. This was the last swing on M15. So basically, ideally, this is your change of character. So this is your change of character here. So let's mark it properly so that it can be clear to you. This is your change of character there. So, and once, now any action an action should be only taken once we have price breaking above the change of character. This last swing on M15 that broke structure. If the market is still below here, then this is still considered a downtrend. But the moment we break above here, then what we are looking there for, after that, we are looking for a retest and to push the market higher. So in this case, the break happened at this point here, as you can see. That is when the market broke high to give us that change of character. So, and once we broke that high, then I was looking for a retest of either this zone here. I was looking for a retest of this zone. It's more of like break and retest. So I was looking either for a retest there or a deeper retracement to the to the fib, that is 50 or 61.8. Unfortunately, the 50 on 61.8 did not happen, but there was a retest of this zone once the change of character happened. So that is where I got my entry from. Stop loss just below this swing low here, because the market still can push deeper here to go up. So that is a setup. And for the take profit, you want to look for 1:2, but this setup, ideally, I don't want to hold to 1:2 as I have said, because these are retracement move, or rather a counter trend move, and you don't want to, you don't want to get caught in when the market is now resuming the downtrend move. So I hope this will have enlightened you on how to take counter trend moves. Is a trend that is still in progress. I will also be showing you a screenshot of how I had sent this particular trade setup on my community on WhatsApp on VIP from the students that we have trained at Brains with Concepts. So otherwise, guys, I'm hoping that this video has enlightened you, and see you on the next one. Make sure to comment, make sure to like, make sure to share this video if it has impacted your trading. See you on the next one. Bye bye.